A reverse mortgage line of credit is available to many clients who receive a reverse mortgage. However, it's much different than any line of credit that perhaps you've ever considered previously. It's certainly much different than a home equity line of credit. The reason is this line of credit grows every single month. It's truly an investment. Now, the line of credit growth rate has been over 5% for quite a long time. That means if you got $100,000 in the line of credit, by the end of the year it'll be $105,000 or more. And there's no income tax on this. It's very hard to find a non-taxable growth rate on any kind of investment of over 5%. And what's best about this is the growth rate will adjust once a year, and it's tied to the interest rate. We all know interest rates have been historically low. Over the course of the next 10, 20, 25 years, interest rates are going to increase. So your growth factor is going, on average, to be probably much higher than what it currently is. Let me give you an example. Let's say over a period of years, the growth factor is a little over 7%. That means your money's going to double every 10 years or so. If we take an example, customer, let's say it's a couple, they're both 62 years of age. They qualify for about $100,000 from a reverse mortgage because maybe their home appraised for about $200,000 or so. So when they're 62, the line of credit is $100,000. When they're 72, that's going to increase to about $200,000. When they're 82, it'll increase to about $400,000. And let's say one of them passes away in their 80s, maybe the husband. If the wife is still there when she's in her early 90s, she's got $800,000 in this line of credit if she's never tapped into it. Now here's what she might decide to do. Let's consider that home value again. It started at around $200,000. Maybe it's doubled in value. It's a $400,000 house now. Well, the reverse mortgage cannot go upside down on the heirs. So the wise thing for this woman to do would be to take out the $800,000. Remember, there's no tax on it. Maybe she passes away in a year or two. Her heirs get the $800,000. They also get a $400,000 home. Now, they can do either one of two things with the home. They can tell the lender, we don't want to deal with the home, you can have it, in which case the heirs are not responsible for paying back a penny. So in essence, they sold a $400,000 home for $800,000. They'll be real happy and they'll think mom and dad were geniuses. Now, the other option they have is maybe one of the heirs says, I'd like to live in mom's home. They can keep that home for only 95% of the current appraised value. So if it appraises for $400,000, they simply have to pay $380,000 to keep the home. Now they may use $380,000 out of the $800,000 they got. They pay off the reverse mortgage, so they've got a $400,000 home that's paid off, another $420,000 in the bank that mom left them. And if they're 62 and over, that child and his or her spouse may decide to get their own reverse mortgage, maybe get another $200,000, $250,000 back on their own reverse mortgage. In any case, they will look at mom and dad as being geniuses for doing the wise thing and getting a line of credit on a reverse mortgage when they were 62 years of age. Now, I do want to add, with the line of credit, you can take money out at any time, $500 here, $3,000 there. You can also pay money back. As you pay money back, it reduces your principal balance and it increases your line of credit. And one final thing I want to add, if mom never pulled out that $800,000, so she never touched it, when she passes away, not one penny of that is owed because she never borrowed it. So please give us a call, send us an email today. We'll talk with you about the line of credit and show you what kind of options you have. And you'll also find out why financial planners say this is an outstanding thing for people to do. And they're encouraging seniors when they're 62, get that reverse mortgage line of credit as quickly as possible.